Three, two, one, blast off. Ladies and gentlemen, welcome to another episode of the MSP Chat Podcast, your weekly visit with two talking heads talking with you about the services, strategies, and success tips you need to make it big in managed services. My name is Rich Freeman. I am Chief Analyst, Channel Master to the organization responsible for this show. I am joined, as I am every week, by our other co-host, our CEO and Chief Strategist at Channel Master, Erick Simpson. Erick, how are you?
I'm doing well, Rich. I recharged over the holiday weekend. We're just coming off of the holiday weekend as we record this. And so I'm plugged back in and re-energized. How about you?
That very, very similar story. And I will say, you never quite know what to expect on any holiday weekend here in my lovely hometown of Seattle. But the weather more or less cooperated, and it was very nice. I took some serious time off and recharged too, and I'm feeling good.
Awesome. Yeah. Ready to rock and roll. Awesome.
Well, let's do some rock and rolling right here as we dive into our story of the week. It's going to take me just a minute to get there, but stick with me, folks. You're going to see where I'm going soon enough. So I have written before about the Virtual Chief Information Security Officer, the vCISO role. There are a lot of MSPs who are saying that they're a vCISO. I've spent enough time interviewing legit full-time professional vCISOs to know that most MSPs who say they aren't necessarily, because knowing security really thoroughly isn't the core or the only requirement for being a vCISO. You've also got to be able to go into the boardroom with C-level executives or their equivalent in a smaller organization and have a business conversation with them about security and successfully persuade them to make the investments that you know that they need to make. And that there's business skill there, there's communication skill, and that's a different skill set than a lot of MSPs possess. Okay, hang on to that. So a few weeks ago, as you know, I was at the 20s annual conference Vision in Dallas. That's where we interviewed Jay McBain and Rania Sukar from Kaseya. John Pagliuca, the president and CEO of Enable, was on stage during that event. And at one point, he was kind of talking about how we're seeing more and more MSPs, and not necessarily giant ones, selling into mid-market organizations and enterprise organizations and needing to learn as they go, how to have not just a business conversation or a consulting conversation. We've talked about that before, but a business conversation with a CIO, a business conversation with a CFO, with a CMO, with a CRO, to get that sort of specific role-specific inflection, understand what the CFO cares about, and know how to communicate with them about what you can do for them in a way that will resonate with them. That's an executive level kind of communication skill that a lot of MSPs are learning now. Well, last week along comes a research study by Ponemon, which is a very well-known, respected cybersecurity analyst organization. It was sponsored by and published by OpenText. A lot of very interesting information in there. Here are a few data points that caught my eye. So 50, they went out. This is a global survey of senior IT and security executives. So our people. 57% of them said that AI initiatives have a very high priority. A high or very high priority. Not a surprise there. They also said in the survey, CEOs, CIOs, and CISOs are most likely to have authority for setting AI strategy. Kind of makes sense at an organization that views AI strategically and has people in those roles. And 55% said their CEOs and boards consider the use of AI in IT and security very or extremely important. So, okay. Businesses are invested in AI. Very senior C-level people are making the decisions there. On the other hand, we learned from this survey that just 47% of the IT and security people, OpenText and Ponemon surveyed, said that their goals are in alignment with the people who are actually responsible for the AI initiatives. In other words, the people who understand the technology best and are drawing up plans don't necessarily feel like they're in alignment with the people who are actually making the decisions. And this is where I've been going all along, Erick, 50% of the people surveyed by OpenText and Ponemon said that their organization has hired or is thinking of hiring a chief AI officer or perhaps a chief digital officer to lead AI strategy. And so we come back, we started with vCISO. What about the virtual chief AI officer? Now, this is a concept we've discussed before on the show. Once upon a time, we had Wes McDonald, who's a truly leading edge AI consultant to MSPs. He joined us on the show, and we were kind of getting into that idea of an MSP being a virtual chief AI officer to their clients with him. But as I put together some of these puzzle pieces from the last 2-3 weeks, Eric, I can really see that opportunity opening up for the MSP who understands that there are going, the decisions are being made by people in these specific C-level roles. Um, they care about different things. They communicate in different ways. If you are the person who, like a VC, both understands the technology and knows how to have that boardroom conversation with the decision makers on AI, you're going to be in a really good position, a competitive position, and then a position once you kind of get some traction with that customer and show them some results, to be that sticky AI consultant for a very long time.
Yeah, Rich, this is it's a phenomenon that we see kind of two sides of the channel having debates about, right? AI is this, super awesome opportunity, and others are thinking, okay, well, this might be a bubble. Let's kind of, be careful, wait and see. But this, the results of this survey kind of align with some data that Jay McBain also shared recently at PAX 8 Beyond. And I believe he shared a stat that was, I remember the exact number, but it was north of 80% of business owners want to adopt AI into their organizations. And I think you and I may have chatted about this on the program before. It's rare that there is a solution that high percentage of business owners say they want to adopt. So obviously there's a desire, there's there's an audience that's ready. And so this VCAIO designation could be a distinguishing factor and a differentiator for MSPs that can craft a practice around it, the way that you've just been talking about, going in and assessing a client's readiness for AI, establishing the governance around it, the security. And again, I think we've also talked about using AI as a pull through for cybersecurity services in the past as well. So it's almost like a 1-2 punch. Businesses want AI, MSPs want to deliver more unique, valuable services that take them out of the server room and into the boardroom, like you were just describing. And then MSPs need clients to subscribe to their higher level of cybersecurity portfolio services because, risk, right?
And a big piece of the specific opportunity we're talking about here is that ability to communicate at a very senior level with the end user executive. And the encouraging thing there, I would say, is we're not necessarily talking about transforming your business and spending enormous amounts of money hire. It could be one person who understands technology, but is first and foremost a business-minded consulting, business process optimization kind. The person who can go into the boardroom with you and have that it might be just that simple. But if you have that skill, yeah, this is not only a great way to grow the business, as you're saying, Eric, but it's also a way potentially, if this is of interest to you, to kind of move up the ladder a little bit into larger organizations where they are looking for somebody to come in and they're maybe not ready. 50% of the companies Open Tech surveyed said they have or are hiring a chief AI officer. The other half might be very interested in having a virtual one if there was somebody out there who could actually do that work. And if you're that person, you're going to have an edge on your competition.
Agreed.
Well, we talked about we started out with the vCISO role and having the ability to convince your customers to make the investments that they need in security. And this connects somewhat, Eric, to your tip of the week.
You bet, Rich. So, I want to talk a little bit about that need, going back to that need that MSPs have to get all of their clients to subscribe to their enhanced cybersecurity portfolio of services. And, we've talked about this a lot too on the show, Rich, and I speak to many, many MSPs, and the ones that are leading the charge have figured out how to present the need for clients to subscribe to these enhanced services without selling cybersecurity, right? So the first thing that I want to say, tip number one, is stop selling cybersecurity to your clients. There's a need, a business need for clients to strengthen their cybersecurity posture. It is not to line your pockets, although if you do it well and bundle and price your services effectively, you're going to make profit margin on those services. But what you're doing is you are reducing the risk for the client, their staff, their customers, and your organization, and by extension, all of your other clients, Rich. So think about this. If you get 95%, let's say 99% of your clients as an MSP to subscribe to your enhanced cybersecurity services, even if that 1% signs a waiver, right, releasing you of any liability for them not signing up, when they get breached, I said when, Rich, not if, when they get breached or they have a cyber incident and they reach out to the MSP for help, what do you think the MSPs do, Rich? Do you think they let them twist in the wind, or do you think they come in and try to save them? They come in and try to save them. I've asked this question in many live sessions and many presentations, and by and far, MSPs say, no, we will help that customer. So now we are going to stop what we're doing for all of our paying clients that haven't been breached, and we're going to focus on saving this particular client, Rich, and hope that there's some budget or some funds to pay us. This gets really complicated, Rich, because once there's a breach, then typically the insurance company gets involved, attorneys get involved, and they may not want the MSP to do anything. So this is bad for the MSP. It's bad for the client, because they've got to sit there and wait for a decision by someone that doesn't do this for a living to come in and decide how we're going to address this. So I could go on and on, right? There's nothing good that comes from a client saying no, even if they've signed your release of liability waiver. They're still down, and you're involved in some form or fashion, no matter what. And then if you do get to save them, you're going to be challenged in getting that client to pay that lofty bill, because you're going to charge them. And if it's a weekend or a holiday weekend, imagine what that rate looks like, Rich. So let's have a conversation with every one of our clients and not make it awkward. My second tip is, it's just a conversation where you express the risk and you share the options, right? We're working together to guard against these threat actors. Here are three options. I like good, better, best, Rich. So here are three options that we need you to choose from before this date in time. Set a date and time. The third tip, where if your clients do not sign up for your minimum good, better, best, good offer, and this is the offer that every one of your clients and new prospects need to subscribe to, Rich, in order to become or remain your client. If your clients don't subscribe to at least your good package by this date and time, and you adjust that date based upon how much risk there is, right? Then you will automatically opt them in to that lower tier, that your minimum tier of service. And this is an ask forgiveness later, not permission first kind of a thing, Rich. So you will be automatically opted in, and you will see this reflected on your next invoice. And Rich, when we do it right, a small single-digit % of clients may complain, and then you've got to make a decision as an MSP, Rich. Do you remain my client, or do we exit you and you find another provider? Because the uplift of revenue, of profit in on that revenue, more than compensate you for losing one or two C, D, or F customers. So think about this from a risk perspective and ask yourself, MSPs, are you willing to risk your business because one of your clients is not an A or B client and not strategic enough to take your advice to protect themselves? You can't save someone that does not want to be saved, right?
Well, and I think you have answered the very difficult for a lot of understandably difficult question for a lot of MSPs at the end there. You opt the client into at least the minimum package. If they push back, what do you do with that? Do you or do you not fire that client? And I believe you're saying yes, you do, because it's just not a smart business decision for you to retain that client. And this is a question I flag that because it's a question a lot of MSPs ask, but I think your advice is very sound, and it's a difficult choice to make, but I think it's a really smart one. The other thing that this reminds me of a little bit, Eric, a little more broadly, is a kind of mindset that I encounter sometimes in particularly successful MSPs. And I don't want to misphrase this exactly, but when they come to the client, it's not like I'm pleading with you to do these things that I believe that you need to do. You hired me because you wanted somebody to do a really good job of providing proactive IT services for your businesses. I know how to do that. That's the mission I've signed up to do, and so it's not do you not implement at least the minimum cybersecurity package, or what I've heard in other instances, do you or do you not swap out your firewalls for the ones that my company has standardized on, or the backup solution, or this is how we do things here at this company, and that's why our clients love us so much, and that's why we're going to do a bang up job. So we're not negotiating about this stuff. You're not giving the client an ultimatum. You're not making them feel cornered or ordered around or whatever, but they sign the deal, come in, do a great job for me. Here's what that entails. And a piece of that is that at a minimum, you're going to have this set of cybersecurity tools, and it's going to keep you and your data and your customers safe.
Absolutely, Rich. And here's one thing that I'll add, and this is an extra bonus, right? Make certain that your good offer, and some MSPs have one offer, but make sure if it's good, better, best, or if you're selling one kind of bespoke or best of breed solution and that you want every client to subscribe to, make sure that the cybersecurity component of that offer meets the minimum requirements of the client's cyber insurance policy. Sometimes that's the lever that ultimately gets clients to say yes, because you say, hey, let's take a look at your cyber insurance policy. You don't meet any of these requirements. We may be doing one or two of these things, maybe, but can you imagine the worst thing that could happen if you were ransomed, or if you didn't have access to your client's data, or they're, threatening to release this data, which, double jeopardy. Sometimes they take the payment and release it anyway nowadays, right, Rich? So sometimes using that as kind of the impetus, the compelling reason to get clients to say yes. And this is what we're doing, is we're aligning with your cyber insurance requirements, so that if you do happen to have a really bad day, you can reach out and hopefully file a claim and not get it denied. And then, spew statistics about how many cyber insurance claims get denied. It's higher than zero, Rich. Much higher.
And oh, by the way, you don't have cyber insurance, as a lot of businesses still don't. Let's talk about that. But that is a conversation for a different time on the MSP Chat podcast. Folks, Eric and I are about to take a quick break. When we come back, we'll be joined by Joel Abramson and Mark Scott from Top Down Ventures. They'll both tell you a little bit about their backgrounds themselves in a moment. I think of them both as sort of managed services royalty. They go back to the very earliest days, just like Eric. These days, they are investors. investing in vendors who sell to MSPs. They have an investor's point of view on the managed services market right now, and that is not one that we get to hear from directly from the investors very often. You will get to hear that perspective in just a moment after the break. Stick around, folks. We're coming right back. And welcome back to part 2 of this episode of the MSP Chat Podcast, our Spotlight Interviews segment, where we are pleased to be joined by not one but 2 people. You know, we do a lot of interviews with vendor executives on this show. We are pleased to do a lot of interviews with MSPs on this show. I don't believe at any point in the past if we actually had an investor in this industry on the program with us, and we've got 2 with us right now. They are Joel Abramson and Mark Scott. They are both managing partners at Top Down Ventures. Gentlemen, welcome to the show.
Hey guys, how you doing?
Great to be here.
Well, for folks who are not familiar with you or Top Down, Joel, I'll start with you. Tell folks a little bit about yourself, what you're doing now, also a little bit about your background, which I think will be helpful, and then give people a quick little primer on Top Down Ventures.
Absolutely. So for most of my career, I've had the fortunate situation of being in between Chris Day, the founder of IT Glue, and Mark Scott, the founder of Enable. And so, 2 legends in the MSP space. And together we had fully managed Canada's largest MSP that we grew very intentionally to 100 million in revenue, and then sold that to TELUS, Canada's largest telco, in 2022. But along the way, obviously, Mark had started and sold Enable, and Chris had started and sold IT Glue. And so since 2018, I was helping Chris at Top Down Ventures, which was his investment arm supporting early stage software companies in the MSP space. And he incubated out of that companies like Quoter, Backup Radar, Control Map, and most notably ScalePad, which has now grown to be larger than IT Glue was. Chris has stepped back in as CEO of ScalePad, and we've, together with Mark, evolved Top Down to now be an industry-first venture fund focused entirely on early-stage MSP software companies. And so Top Down Founders One has been in market for just under a year. We've had incredible success bringing together the investor community from both inside the MSP ecosystem and some capital from outside. So we're about 20 million and with a target of 40 million in the fund. And we've made our first 6 investments. And so we're just thrilled at the reception from the industry itself, but also the momentum that we've been able to gain on both the investor and investment side.
Now, Mark, Joel has told a little bit of your story, but I'll give you a chance too to tell folks in the audience a little bit about yourself.
I mean, as Joel mentioned, I guess my first segue into the managed services space was co-founding Enabled Technologies back in 2000 with Gavin Garbett. And I was the CEO of that for a number of years, and then basically left there before we sold it to actually SolarWinds, and started an MSP that, as Joel mentioned, eventually merged with Chris's MSP to form Fully Managed. And then we built that up, over several years, and then ultimately, got in a position basically around that 2019, 2020, right around actually when the pandemic began, got in a position that, we looked at some different alternatives, I guess, strategic alternatives for the business, and ultimately ended up selling to TELUS. And then, as Joel mentioned, I stayed with that asset basically for TELUS, helping run it for a couple of years. And then what we basically decided is, let's take all of our domain expertise and connections in the MSP space and really kind of more professionalize early stage investing for MSP software companies, and really kind of those early stage ones, taking them through the million in ARR stage to kind of north of 10 million till you're obviously going to the next stage of investor at that stage. So again, we've been pretty excited about again how we've been received across the industry, and definitely look forward to continuing to build on what we've done here the last couple of years.
Now, before we dive further in, I want to also give you a quick chance to tell folks about your blog and podcast, because a big part of why you're here is I'm a huge fan of both, the blog in particular. It's called MSP Outliers. Tell folks a little bit about it.
Sure. I mean, probably the world doesn't need another MSP event, and the world doesn't need another, MSP podcast that's kind of talking about the same old stuff, operational maturity and those sorts of things. So what we decided to do is really focus on telling the story more in the lens to the investment community. So whether you're a family office investor, right up to PE investors, and obviously right up to Wall Street as well. We definitely want to raise the flag, more from the investor perspective, and what we thought was to keep it more topical. Basically, every Thursday we do something. So we announce, the podcast of that month. The first week, the second week we send out the blog. The third week we obviously bring in the guests in a format like this, 2 guests with again sections to it, and then the fourth we kind of do a roundup. So yeah, we definitely definitely had very good feedback from it so far, and we're going to continue to build upon what we've done. So I mean, why we picked that format is to make it very topical for in the month with guests that kind of align pretty well to that. So and definitely appreciate that you guys you guys know the amount of work that it takes to go into something like this, right? So it's nice that you guys enjoy the work that we're doing there.
Yeah, Rich, I might just say, one of I get to be in this fortunate position of meeting with Mark and Chris every week, and in every one of those one-on-one sessions, I get something more than I brought in. And so whether that's an enhanced strategy or a new outlook or just I was looking at things upside down. And I've had the privilege of doing that since 2018 with Mark and since 2012 with Chris. And this is now finally a platform for them to share some of, that with the world, because these guys are transformational thinkers. And it's cool to see that coming out into the world through the blog and through the podcast, what I've been able to what I've been exposed to firsthand for many years now.
Joel really undersells himself. He runs the show, guys.
We will link to both. We will link to both the blog and the podcast in the show notes for this episode, so folks can go out and enjoy the content as much as Eric and I do. Maybe just set the stage, guys. Most of the audience is MSPs. They know what the managed services landscape looks like from an MSP point of view. It's rare that we get a chance to look at the landscape through the eyes of an investor, and therefore, by extension, a vendor, because you work very, very closely with a number of vendors. What does the landscape out there right now look like from your perspective?
I'll jump in here. Start this, Mark. So by landscape, I mean, what I really see is, we've been we've been firsthand witnesses to this transformation over the last kind of decade of MSPs, doing their thing, evolving from break fix to managed providers, and then starting to aggregate. So we set out on this plan to bring together MSPs and scale out across both verticals and geographies. And when we were, telling our story in 2019, 2020, it was a very different time. Most folks didn't understand what an MSP was when we started to meet with them and tell our story. Now it's totally different. You see some of these big aggregators form, billion-dollar MSPs come together, and they really have a place in in the world of investment, because so many private equity firms, family offices have decided to lean in and take their piece of the pie in the managed service space. Um, on the vendor side, there's been really strong demand for MSP platforms for quite a while now. It started with Thoma Brava coming in and investing in ConnectWise, and then has compounded out with Insight and Kaseya and General Atlantic and their portfolio of investments. And so there's been a huge amount of capital put into these companies when they get to a certain scale. And so you have now big MSPs, you have big MSP platforms that support those MSPs. And so you start to think about, okay, well, what's next? What happens when an industry gets to that maturity point where you have, such, a large amount of aggregation that's happened on the service provider side and on the platform side. And so we just looked and saw, well, there was a ton of great innovation happening at the early stage before, you had MSPs trying out enterprise technology and maybe trying to retrofit it to their practice. But then ultimately, that not working out very well. And so then they defaulted to the technologies that were purpose built. But now you have this incredible innovation cycle happening at the early stage as more and more companies start to serve MSPs as their primary customers versus just a secondary or tertiary part of their strategy. And so then there is some there's growth capital available when these companies get to 10 million so they can take them on the next phase of that journey. But the early stage was so underserved. And so that's why we started the fund, was to bring capital to that, around that first million of ARR. And there's, generally in B2B SaaS, there's a lot of early stage capital that comes into these type of companies. But in the MSP industry, I think because it was relatively unknown at the highest level, the venture side actually wasn't paying much attention to it. And so not only did we want to serve that and bring some of the what we consider kind of new capital into the early stage, but also because of the wealth that had been created in the MSP space. And by wealth, it doesn't have to be Mark Zuckerberg wealth. It could just be, I have a really successful MSP and I'd like to invest, a couple $100,000 back into the next generation of software companies. We've created that vehicle to enable that.
So, team, in your August blog, you post that cybersecurity may be the key to evolving MSP from Main Street to Wall Street. Can you unpack for us, from your perspective, why the MSP market hasn't yet caught on with Wall Street and why security could change that?
Yeah, I mean, I can hopefully handle that one, Joel. Yeah, I mean, I think if you just look at overall, I guess, the history of managed services, and we wrote a blog back in the blog and podcast, I believe, back in June, was kind of covered more of this topic in a lot of depth of, as much as the industry has grown, as much as excited we are about it, we really haven't seen the success at the public market level from either the software platforms or even one of the large roll-ups, as an example, eventually going out public. I mean, in fact, in that case, there's been none. But in the case of software vendors, we've had Datto that went public a number of years ago and then obviously went private after the sale to Kaseya. And then we've had Enable over the years, that spun out of the SolarWinds and went public. So, I think that what's interesting, and John Pagliuca, the CEO of Enable, was on our podcast last week, really talking about, when he first was trying to tell the story to Wall Street, he'd go in to a room full of analysts and ask people, does anybody know what an MSP is? And basically one hand would go up. Today, he said, if he does that same question to the crowd, maybe one hand doesn't go up. Most of the hands do. So I think it's just been this evolution of educating, slowly but surely educating Wall Street. And John made another really insightful point as well last week. He said, what's interesting about Wall Street, they think in silos Main Street and really SMB and MSPs think horizontally, right? In terms of from a solution perspective. So that's why you've seen Enable start to, I wouldn't call it a pivot, but evolve over time to really be more in the cyber lane, right? If you really look at who are some of the big dogs in from a public perspective, you have CrowdStrike and Palo Alto and Zscaler, to name three. It's a very well defined, covered by analysts. Jim Cramer talks about it, et cetera, right? So I mean, versus MSP is just kind of this, kind of this obscure term to some degree, at least at this stage. So we really feel, and so again, we're kind of in this age of what are the two biggest technology drivers that are out there. It's obviously AI is one, but definitely cybersecurity we feel is kind of the gateway to AI adoption, right? I mean, if you don't have a great cyber posture as a small business, as a medium-sized business, as a large business, probably AI adoption and rolling that out across your organization may not be the best move. So this whole idea of cyber resilience, and I think we've all in the MSP industry invested a lot in cybersecurity and information security over a number of years, and I think we're seeing better programming as well, so better training, more certification around people that are giving vCISO services, those sorts of things. So we really feel that cyber is already an established silo, from a standpoint from Wall Street. So we could see again some of the pure play cyber platforms, or even if you look at the bigger RMM vendors, they're all half security companies anyways. If you look at most of the technology that they've built or acquired and integrated into their platforms over the last number of years. So we really feel that is going to be, something that we feel some of the bigger platforms could probably lead with to tell their story to Wall Street if and when the markets are ready to take on those types of companies, which I think is really important overall for the industry, that we have large, successful ServiceNow-like businesses in the MSP space. And then to flip it over real quick to the service provider side, we feel that that's another area as well that has to be tackled, because we can't really kind of leave those large, companies as they go north of $1 billion in revenue, kind of in these evergreen PE funds forever, right? I mean, we've got to, hopefully we're going to see some success on that side as well. And then MSSP, we kind of tackle a little bit in the blog and podcast this month, in that we really we still haven't seen a ton of big success stories basically in pure play MSSP services for the small and medium sized business. So we think that that's probably an opening for us in the market as well as we go forward, is to help the industry start to create some Herjavec group type companies within that side of things too.
Well, that'll be an interesting thing to watch as you pursue that. What kind of companies you look into, and what it is about them that you think makes them potentially a good fit for the SMB and a good opportunity to go after that so far unexploited opportunity. I want to follow. You were talking a lot, Mark, about platform. There was something you said in that same August blog post that Eric was referring to before, where you were talking about a big challenge for investors in security is determining if a startup that you're assessing is, quote, building a feature, a product, or potentially a platform, which was an interesting way to kind of frame it. But it also, intrigued me in terms of how you guys think about that. I mean, because clearly platformization is a huge trend, specifically in cybersecurity right now. And yet when we're talking about early stage companies here, you almost can't really be investing in a platform So, I mean, how do you kind of think about the opportunity for a company that fits into the features silo or the product silo as opposed to the platform silo, and its viability, its place in the market, given how much momentum there seems to be around platforms?
All yours,
Yeah,
Philip.
I'd love to jump in here. So, um, you know, one of the interesting things about the MSP space, I joke that we've got a bit of a crystal ball and it's enterprise SaaS. And so you can look up market and look at what some of the great leaders in enterprise SaaS have done, and then understand what exists in that market today versus what exists in the market or in the product set for SMBs today. And so, MoveWorks is a great example. And Fully Managed was actually an unbelievable learning, learning atmosphere for us because we did have a piece of the practice that was serving the mid market and small enterprise. So we had a ServiceNow practice. We acquired a ServiceNow practice. We used that ServiceNow practice to migrate our own ITSM off of ConnectWise into ServiceNow for the MSP. But in that, we also got to work very closely with ServiceNow and see what products these mid-market and small enterprise customers were consuming. And one of them was MoveWorks. MoveWorks was this phenomenal, AI chatbot, let's call it, in the early 2020s that allowed for service automation, level zero automation. And, lo and behold, 5 years later, MoveWorks gets acquired by ServiceNow, and it's a, incredibly well-penetrated level zero, level one help desk agent inside the enterprise. That's a great example of a technology that was founded 5 years ago, gained broad product market adoption, sold to ServiceNow in a multi-billion-dollar transaction, and nobody in the SMB or MSP space has probably ever looked at or touched or played with MoveWorks inside the ServiceNow platform. But there's companies that look a lot like MoveWorks emerging in the MSP space today, and a type of product like that can become a platform or part of a larger platform. And for example, we've looked very, very closely at some of the platforms or the products in that space that are building for MSP today. So I know it's a long-winded way of saying, there is no crystal ball for early stage venture investing, but how do we delineate between a feature, a product, or a platform? Is we can look up market and see what those various trends or pre-existing products or platforms or categories look like up there, and then start to measure the solutions that are being built for or adopted by MSPs accordingly. And so, we're looking for, we do obviously a bunch of analysis on any company that we're looking at. We look at the addressable market, who they're selling to, are they selling through, what's the breadth of features that they have today at this early stage, what features are the customers attracted to or raving fans of, and then where can they take this piece of technology to be a more broad platform. And so companies like Cynet, companies like Kaseya, they have a huge multi-product platform type offering for let's call it cybersecurity solutions. But like a company in our portfolio like ThreatMate has a really strong platform potential because they've you've taken some of those products and things that like a Kaseya would do and integrated it across multiple feature sets to allow for the beginnings of a platform. And that's why we're so excited about what they're doing. And so I love the constant evolution of the technology life cycle because it forces for innovation at every step, whether it's AI coming in or new security practices and frameworks coming in. All of these products are forced to evolve, and those are it's helps shape our thinking for the next generation of market leading companies.
Now, you guys have written before about the renaissance of left of boom security. What's driving that now, and how does that impact MSPs today?
Well, I think what's driving it, let's we don't have to go back I'm sure it is present day reality for a lot of MSPs today. But MSPs in general have been the trusted advisor now for a number of years. And the expectations of them have always been, to take care of everything IT. So they were kind of caught in this tough position where um, the lack of doing something was all of a sudden like their fault because the expectation was you did everything. And it's been a really tough place for MSPs to exist for a very long time with the expectation that they do everything left of boom, and then they're held responsible on the right side, when the reality is that most of their customers have been setting their own risk tolerance, and defining that by the products and services that they consume from their MSP. So it's tough. MSPs are generally small businesses, and you know, I remember when Fully Managed got to, I think it was about 250 employees, and Mark said to me, "We need to hire product management." We've had people managing our vendor selection, we've had technology leaders, but we've actually never had a dedicated product manager role that sets the pricing and the packages, and their whole role is just to continue to evolve those packages and that offering. But most MSPs are not 250 employees, and by definition, most of them, as a flow through of that, most MSPs don't have product management. And so when you think about all the things an MSP is expected to or trying to be responsible for left of boom, it's nearly impossible for them to have every product properly procured, packaged, sold, and then configured to plug all these holes for an event. And then an event happens, and then they need all the right of boom, response, and how are we going to deal with this breach? And so it's as you guys know, it's a very, very tough job. And so we see, you called it a renaissance. MSPs are getting better and better and better at selling, at putting their foot down on what their stack should be. Thrive, I think, as a scaled company should be, is the market leader by having the majority of their customers, if not all of their customers, consuming their full security stack. But I think if MSPs are honest, most of them can't say that they have a complete left of boom security stack, nor that their customers are consuming the whole thing. And so we think that there's a lot of great things that can happen to help put together that complete offering left of boom, but then also help MSPs ensure their customers are procuring it.
Now, you guys might tell me this question we're about to ask is not really a question worth kind of thinking about at all, but there's been something on my mind recently that I'm not really qualified to answer. I can't think of anyone better than you guys to just kind of set me straight on this a little bit. So as I read about the venture capital scene right now, what it looks like to me is if you're doing something in AI, this is a pretty good time to get venture capital funding. Beyond that, the works are still kind of gummed up ever since interest rates went up, and it's been hard to exit, therefore it's been hard to raise. And I've just recently started kind of thinking to myself, are there vendors out there who the folks in our audience rely on for one reason or another, who might be approaching a point where they need to raise more money to continue investing in R&D and growth and so on, and might have trouble doing that because they don't have AI, in their name or whatever. Is this something? How big a problem potentially is it for an MSP that the venture capital market right now is still kind of outside of AI, still trying to kind of regain some of the momentum it had before?
Yeah, I mean, I think the good news for the MSP space is it's a pretty industrial strength model, right? Like even in good times and bad, most businesses that are properly run obviously can be as profitable as they want to be, depending how much they're going to invest in growth. And I would say that goes the same with the software, the successful software companies. I mean, I think there's something like 13 billion in dry powder private equity looking for investments in the MSP space. So I think for the what your question, Rich, on, is there kind of any of the name players that people would use as some of their key suppliers running out of runway? Not that we know of, that's for sure. And I think most of those companies would be funded anyways by private equity at that stage. It wouldn't be venture, but going to venture to more early stage. I think that's the reason we really saw, a big opportunity with top down. And I mean, we're finishing off fund one. I mean, fund two will be obviously probably a $250 million fund, something like that'll come out next year. We see a lot, like definitely a void in the early stage venture. And yeah, I mean, I think you can put AI in your domain, or everybody's got kind of an AI spin. I mean, as an investor, I mean, we see a lot of stuff, so we definitely we understand what's something that's real and something that isn't. I think we're way overplaying really AI in the MSP space, I think, to some degree right now. I mean, most MSPs, they're not using that much AI to automate yet. Again, we've got some great companies in areas like, conversational service automation, areas like that. But I mean, I think it's still very early stages where we're seeing AI being, broadly applied within the MSP space. So I think the good news for the MSP space, it is, it's a pretty solid business model first and foremost. That and there wouldn't be as much private equity trying to invest in it if it wasn't. Again, I think the big name, like again the Andreessens of the world, and obviously all the big deals that we see out there. I think there is fundamentally, the traditional venture capital model is fundamentally broken, right? Like you've got 10 funds that raise 75% of the funding, right? And do most again, the big ticket kind of AI unicorn investing, and then everybody else everybody else is kind of dealing with the table scraps basically. So you're going to see more funds like us with kind of, again, specific operator knowledge, domain expertise in an industry that has kind of cradle to grave the relationship, so that we know when we're going in, again, back to a couple of questions ago, looking at a cyber company as an example, a cyber startup, we don't want to invest in something that's a feature. We know 4 other of the platform companies are building that, have this as a feature or are building it soon, but this is a product that is going to, build open APIs and going to go out and do the partnerships with some of the larger platforms. So at the end of the rainbow, we have, a potential exit strategy for that business. Because again, the majority of startup companies, as they become successful, the most successful ones, they get sold for under $200 million, right? So you're looking at most companies in software would get sold at either to a majority situation, to a PE investor, or actually bought by a larger software company, and they're going to be in that range. As you start to go over 200 million, the buyer landscape, the investor landscape gets a lot smaller as well. So I mean, I think fundamentally the traditional venture capital model has a lot of issues with it, and there's a lot of funds running out of money, let alone their portfolio companies, right? So, but I think you're in good shape in MSP.
Yeah, it's exactly, Mark. I think you're bang on. There's been no period of time that MSP industry has had more capital, directed toward it. So this the audience of this podcast is the MSP industry. We're in great shape. We've got new venture capital funds like us coming in. Yeah, if the companies that have, potentially raised money and are running out of money, they're probably because they've not found product market fit yet, and they're either going to extend or they're going to die. And of course they're going to die. Like there's venture companies that don't get to exist because they haven't built the right products to serve the market. But in general, there's never been more capital in the space, which is a very, very good thing for MSPs themselves and for that symbiotic relationship with the MSP vendors, in driving innovation and new platforms coming forward, and pushing the future of the industry. Look, we invested in Slide because we think what Austin is doing is phenomenal. I don't think Draper is going to invest in a backup and disaster recovery hardware company. They're just not, they're trying to find the next TikTok. They're not trying to find the next Datto because they were never invested in Datto in the first place. And so, but we did because you could talk to every single one of our LPs and they're all thrilled about our ability to partner with Austin on Slide, because we all know that that's a phenomenal company that's being built right now.
This is such a fascinating conversation, Joel and Mark, and it's taking, I think, the what MSPs should be thinking about to a whole new level in terms of things like being attracted to maybe some of these new vendors that are coming into the market. We're seeing them all the time: cybersecurity, AI, a lot of startups. So can you share from your perspective what MSPs should be thinking about from a maturity level of a new vendor, and especially the financial stability of that vendor? Like, what questions should they be asking? What should they be considering when they're thinking about partnering with them? Because, as a former MSP like you guys, I get attracted to the bright, shiny object too, right? But at some point, reality has to set in, and we have to be able to make business decisions on what time, energy, and resources we invest in a new vendor relationship so that we don't regret it later. What can you share?
I can start, Mark. You please top off. I mean, the reason that Slide is so successful out the gate is because Austin got up there and said, guess what? We're building a company that, is laser focused on innovation. It's laser focused on customer support. And we know that you need to serve the needs of BCDR with your customers today, and we're going to continue to support that. And so that was really easy for MSPs, or it is easy for MSPs to say, yeah, I know and I trust and I believe, and I'm willing to get on board with that. I'll tell you, Top Down is trying to earn and maintain the reputation that our portfolio companies, or if you see Top Down invested in a company, you can believe that they are committed to innovation, that they're committed to pure learning, that they're committed to putting MSPs first. That is what we're trying to do, is identify those leaders, put them together with the other leaders in our portfolio, and make sure that we're focused on the best possible outcomes for the MSPs today and in the future. And that's us. There's a lot of, like you said, new entrants into the market, entrants from that don't have the trust and credibility of an Austin McCord, that are selling the next shiny object. And so, what do you look for in that? Well, you can look under the covers and make sure that the development is sound. You can look for accreditations, like that they're SOC 2. You can look for strong investors, whether that's Top Down or other great, VCs that are starting to come and invest in the space. But I think just generally MSPs, do they have the time to go that deep on every vendor that they're looking at? Or should they be focused, like we were talking about earlier, on developing a full comprehensive stack of left of boom security objects to ensure that they're protected, and the product management around that and their own services? And, so MSPs, like we said earlier, it's a tough business. And, there's a lot of great products and vendors coming up every show or every month. And there's some critical things that you can look at along the way. But yeah, hopefully Top Down is making it easy for people to select the right group of products if they see that we're supporting them from either the investment side or just even, at our events and how we're out there in the market, integrations like with a company like ScalePad, things like that.
Well, as you said just moments ago, Joel, the Austin who have come up a few times in the past few minutes is Austin McCord. For the three people in our audience who don't know who Austin McCord is, he is founder or co-founder of Datto. I mean, somebody who's very, very familiar in the MSP world. And Slide is the new venture that he's working on right now. We actually spoke about their MCP interface on this podcast within the last few episodes, and folks who are kind of curious to learn more about what we're talking about can go to slide.tech, if I'm not mistaken. I think that's the URL. We were talking about security startups before, and this whole question, is it a product, is it a platform, is it a feature? Different, but I guess somewhat related question in the realm of AI, because I keep coming across now these very interesting young startups that are using AI in very sophisticated ways to automate the work that MSPs do. And it reminds me a little bit of a few years back when it was startups, young, interesting startups that were getting into cloud management before the big RMM PSA companies did. And then eventually the big RMM PSA companies did. I assume sooner or later you'll see the ConnectWises, Kaseyas, and Enables of the world start to incorporate some of the technology that these young, nimble AI startups are building for MSPs and help desk. And I'm just wondering, from an MSP standpoint, what would you advise, though? I'm thinking about, investing, not like literally placing an investment, but purchasing and putting time and effort into deploying and training up my people and so on in this new tool that does something that sounds really great, but I don't know if it's how long the future of this particular company or startups like it is. It sounds a little similar to what you had to say about security startups before, but what would you advise people?
Yeah, I mean, I think it's definitely who's backing them, right? Because and again, we just invested in one. It hasn't been announced. Globally yet, but it should be in the next couple of weeks here, I believe. Definitely do your homework on who's the CEO, who are the players internally, who are, just what Joel was just covering, right? Is it Bellini Capital backing it? Is it us? Is it, a number of other, investors? The good thing about the MSP space, it's now mature enough that there is a lot of people that have had exits. And again, we're seeing, early stage investing being more professionalized through organizations such as us. So I would, just do your homework, figure out who, who they're backing, and then what's the solution that they're trying to solve. Is it a CSA situation on the ConnectWise, that's on the ConnectWise platform? Talk to the ConnectWise guys, and they'll be able to let you know as an MSP, like how deep the integration or conversations are. And I think that's just the bigger platforms. I mean, they don't have enough time and energy to build every widget that's out there. They're definitely evaluating all the time who's out there in AI or cyber or, cloud automation or whatever it may be. So I would just say, do your homework. Does the solution fit what your kind of use case is, what you want to do with it? Like, are they SOC 2? Like, again, all the typical diligence that you have to do around a software vendor, and then who are the players that are backing them, and who have they talked to? Because I mean, obviously, back to this: is it a feature, a product, or a platform? If you've determined this is a great product that's going to fit in our tech stack today, where is it going to be, 2 or 3 years from now, down the road? And so obviously you got to figure out, though, if you're running Autotask and this is a solution that fits better into the ConnectWise technology ecosystem, then maybe there's another one that you can look at, kind of thing, right?
Yeah, I would say you want your vendors to be successful because when they're successful, that means that they can reinvest back into innovation, they can build out their customer success teams, they can hire great talent. And so, if it's looking like the vendor that you're looking at has been kind of, small for a very long time, they haven't broke through, they don't have a great team, they're constantly like, turning people over. That's, it may be a number of things, but the ones that are growing and exciting and they've got great talent and people are showing up and the features that they're building are truly innovative and they've got strong founders that either come from outside the MSP space or maybe it's their second time or third time inside the MSP space, but they built phenomenal products. Like that's the companies we look for, and that's the companies we encourage MSPs to look at buying the same attributes, right? Like if you meet a great founder who's really, like their thinking is truly, something that is inspiring to you and you watch what they're doing and you're excited about the journey, then enjoy the journey. That's, it's a lot of the similar, I'd say, principles that apply for investing, apply for consuming those products as well. The reality is that things don't stay the same. And you watch companies like Halo, you watch companies like Ninja come and be these big, important players in the MSP space in, half a decade. And you know that the next ones around AI and automation are just getting started right now. And sometimes when you meet a founder or hear a pitch or start to look at a company, you just feel it like, oh, I know that this is going to be part of the future of the MSP industry. And I would say don't be afraid as an MSP to start the journey with one of those early stage companies because they might just be the next really, transformative company in the space that you can have been a part of that journey. Because as likely your business will grow as they grow if you're a part of a transformative technology, like especially in this agentic service era.
Joel, I love how you invite everyone to join the journey. I think that's a very cool phrase. We're gonna steal it if that's okay with you. But hey, you're
Fun. It's fun. It's
right,
great.
hey, right. Hey, we're all going this way. Come on, come on. Your recent blog post hints at what your September post will be about, which is the impact of AI on MSP tools. Since we're talking about AI now, um, tell us what you see coming, your crystal ball for hyper automation, the SMBs, AI readiness. We know that a very high percentage of SMB business owners say that they want to, engage with AI, um, and kind of the whole digital labor landscape and what that means for MSPs.
Yeah. Well, look, first of all, we got to understand what's going on in all these environments, right? I think that like supremely underutilized technology out there in the broad SMB space, specifically through MSPs, is understanding SaaS utilization, whether it be from a license reconciliation standpoint or just from a generally like what are people using, how are people spending their day, in what applications, doing what is the persistence of shadow IT and people doing things on their own, and a whole other layer just got created around shadow AI and how people are leveraging AI in unauthorized use cases. I say unauthorized, but most wouldn't have an AI acceptable use policy anyway, and so it's really starts there. Um, that is just the low hanging fruit to just understand what's going on in the digital work environment, both inside your MSP and inside your customers, and helping them gain visibility into that. Um, we see portfolio company Produce8 doing a lot of great work in that space, as we have seen with more on the security side, like Assassin Alerts and Assassin Leo and some of the previous companies around that space. And then, we're continuing the evolution as MSPs around how do we talk to our customers, and ScalePad's doing a great job with their new LMX release that comes out tomorrow around having those conversations and run QBR and the, really just, continuing the plight of moving MSPs from the server room to the boardroom. And then when we start to think about AI and the impact on MSPs and their customers, you have some really great companies that have come to market. What Vince Kent's doing over at Synthrio and basically taking all the models and allowing for MSPs to provide their customers with like a GPT-like interface and connecting all their data. It's huge. Still very, very early for what SMBs can apply the AI technology for. And then you have companies like Thread that have existed for a few years around like conversational service automation and just trying to take, meet MSP's customers where they're at with how they interact on issues. Getting the conversation into Teams was the first step. And that was, remember how that company started to be built. And then now it's evolved to be, some of the automated service interactions. But then while they've been doing that, other companies have popped up that have mastered the automated service interactions, like a MoveWorks, who I mentioned earlier, did for the enterprise. And they're able to just tackle a bunch of level 1 issues, and they've solved it properly with the right amount of depth where it can be trusted and put into a live customer environment. Because ultimately, as an industry, we have to never take our eyes off the fact that we're associated with some sort of value from our customers. And the moment that we try and automate or AI that away, we put the value or perceived value that we provide at risk. And so if the number one things MSP's customers value MSPs for is when shit hits the fan, I can call Jim and get help. And we've all of a sudden put an agent now that's called Jim. We've broken that maybe it's a low value interaction as far as the grand scheme of everything an MSP does seems, but it could be the most critical piece for those customers. And you can't break the whole model by trying to automate everything out of it. And so this is why it's an evolution, and we can't even Mark can't put a blog forward next month and say this is the answer for where AI is going to go in the MSP space. But we're learning more each and every month around what products MSPs what they want from these products, what they want from these platforms, what they're willing to give up, what their customers are willing to automate. And we'll continue to kind of iterate that throughout the journey as these technologies continue to evolve. But the answer is not a light switch for us to flip to tomorrow, and all of a sudden gross margins go up by 10% and everybody's just making more money because of AI in the MSP space. Like, sure, that could be an eventual outcome, but we can't dismiss the value that we create, and then all the shortfalls that need to be fixed along the journey for the industry that is still relatively immature, despite all the incredible companies and platforms and risk mitigation and evolution of the industry over the last 25 years.
There's an entire follow-up conversation for us to have someday about that last issue you were talking about there, Joel. What an MSP should or shouldn't automate. There's one list of things you can automate with AI, and there's maybe a different list of what you should automate without kind of breaking what made you. It's a very interesting topic of conversation. And I will also say, putting on my journalist hat for a moment here, I'm very intrigued to find out what this AI company you guys have invested in is. I guess I don't have all that much longer to wait before I find out, but keep in touch. I'll be curious to know what that's about. In the meantime, for the people in our audience here who want to get in touch with one of you, want to learn more about Top Down, where should they go?
I'd like to think we're pretty accessible. Joel at topdown.com, Mark at topdown.com, topdown.com. Invite everybody to come into our monthly podcast or subscribe to the newsletter, or even just reach out if you want to learn more about what we're doing, the portfolio companies that we have today, what we're excited about in the future, or even just like, what is venture capital? When we started out this journey, we were committed to use the kind of catchphrase, build this out loud. And so a lot of our LPs have just been along this journey with us as we figure out all the steps that we need to do to set the fund up and then bring capital together and deploy that capital, and what the hold period looks like and the returns analysis and all this stuff. It's been such an incredible experience for the three of us plus the extended team in building this fund and putting it together, and having our LPs come along on the journey with us, having our portfolio companies believe that we're going to put this together and then come along on the journey with us. So we're happy to host those conversations anytime, both in this public format and at one-to-ones or in person at events and things like that.
Well, super interesting conversation. I really appreciate both of you making time for us here. Folks, Eric and I are going to take a quick break right now. When we come back on the other side, we'll share some final thoughts about this conversation with Joel Abramson and Mark Scott from Top Down Ventures. Have a little fun, wrap up the show. Stick around. We will be right back. And welcome back to part 3 of this episode of the MSP Chat podcast. And one final thank you to Joel Abramson and Mark Scott from Top Down Ventures. Very interesting conversation. Very interesting take on the industry and opportunities for vendors and MSPs there right now. The thing that there's a lot actually that we could probably dive into here, but the thing that I keep chewing on a little bit is that framing that they use very early in the conversation of is this a feature, a product, or a platform, right? And you totally understand how an investor needs to look at any vendor in that particular way. They need to understand what they are buying or buying a piece of if they make an investment in that company. But it occurs to me that's actually a very useful question for MSPs to ask as well. Am I buying a feature, a product, or a platform? Because just my take, I'm curious for yours, you probably don't want to be adding another vendor and another bill if it's really just a feature, given that there are probably going to be products that have that feature or will soon have that feature. And then there's a whole bigger conversation that we don't have time for right now, but that we've spoken about on the show before, about this concept, especially in security, of platforms. Security and managed services, that the Kaseya's and ConnectWises and Enables of the world have platforms that provide a lot of functions. May not be best of breed in each one of those functions, but there are certainly some efficiencies that are made possible by buying into a platform as opposed to a product. So feature, product, platform, a good question for MSPs to ask as they evaluate vendors themselves and just kind of decide which of those fits best into my business, my strategy, my future.
Yeah, I picked up on the same thing as well as other things, Rich. But yeah, we could go a long time just talking about some of the interesting conversation that we had. I think that MSPs now can consider that as part of their scorecard when they're evaluating vendors, because the thing that struck me was kind of in the same vein that struck you, but it was more about, how is that vendor funded, right? So if I'm scorecarding, which vendor I want to maybe trial or adopt or participate in their program with, funding is an important factor. And if we've got folks, that are investing in that vendor, then they're seeing things from a completely different lens than an MSP might see as well. So I think that, if we're looking at, two competing vendors and one is kind of bootstrapped and the other one has got, rounds of funding behind them, that would skew a little bit of extra points in their favor in my assessment, because I feel like there's less risk moving forward. Like, they're funded, they're willing, they have a capacity to grow and expand. And like you said, is it a feature, a platform, or product? But they can add, they can develop the roadmap, is funded. So if I have a feature request or if I engage with them, hopefully they've got, a team that is able to do that without a lot of folks, spinning a lot of plates, a lot of folks wearing a lot of hats. So I think it would help me make a decision, when everything else is kind of, equal, but then we've got somebody that's kind of bootstrapped versus somebody that's, attracted the attention of investors and is getting funded and is growing. I think that's a great factor. And then on the, feature, platform, product for MSPs, I think about it a little bit differently. Am I buying? So is the client buying a service, a product, or a strategic service, like product or reactive reactive support or strategic business growth. I think that's the, just kind of, spitballing with you right here, just thinking about it is like, how do I differentiate myself on the market? Not a reactive, you know, IT vendor, but a strategic business partner that brings some of the things we talked about in part one. VCSO, VCAIO, want to get that right? Right. And meeting these folks in the boardroom and having those, the strategic discussions at that level rather than my point of contact is, the administrative front office person when something's broken.
I just want to quickly underscore the first point you made there, because every MSP we know, it's just in their DNA when evaluating a vendor. Are they, SOC 2, Type 2, et cetera? It should be every bit as much in your DNA just to check on the funding, the ownership and the funding. It's not necessarily, it isn't, in fact, the first and foremost consideration. It's probably not even in the top 3 to 5, but it is something that you need to check on. And like you said, factor into the decision-making process to minimize your risk.
Yep.
All right. Well, with that, folks, we have time for just one last thing. And I'll say right up front, this is maybe not the perfect story for a podcast hosted by two dudes. The women in our audience might have a slightly different perspective on this, and I don't know whether this is a story where I should be applauding somebody's grit, or is this a little bit over the top? I'm not 100% sure, but this story concerns a 31-year-old strategy consultant in New York who was ready to tie the knot with her boyfriend, who was also ready to tie the knot, but she told him, "We're not getting engaged." So she wanted to make her own engagement ring, and she wanted it to feature an ethically sourced diamond. She didn't want to get a diamond that might be compromised from where it was mined, and so she essentially wanted to find a diamond in the wild and use that in the engagement ring, and she would not get engaged until she found a diamond. So by golly, what did she do? She went to Murfreesboro. I'm sure I'm mispronouncing that. Sorry, folks. Arkansas. She went down to Crater of Diamonds State Park in Arkansas. Who knew that exists? But she did. And Eric, she spent 3 weeks, 8 a.m. to 4 p.m. at Crater of Diamonds State Park with 1 day off, digging for diamonds, until, by golly, she found herself a 2.3 carat diamond. Cost-free, right? She found it, and then she used it to make the ring.
Wow, that's grit and dedication. I mean, if I think, and so flip it in my mind, of course, I'm like, well, that's a great tactic for somebody that's, the beau, in the relationship might be a cold feet kind of tactic, say, hey, yeah, it's great, let's get married, but we're gonna have to mine our own diamond, and maybe they can only do it on the weekend, so it kind of stretches it out until it seems like a lot of hard work, Rich, but my mind went the other way. It's like, oh, that's kind of a stalling tactic where the guy says romantically, yes, we'll find our own diamond, but secretly is like, oh man, how do I get out of this one?
You're probably right. The initial reaction from her fiance probably was, "Uh-oh, yeah, is it the stuff?" It was right up until she booked a flight to Arkansas, and then he knew, no, this is for real.
Wow!
And congratulations to the two of them, of course.
Yeah, and way to save money on the actual diamond, which is probably the costliest part of a wedding ring. Even you could probably get a set 2.5 carats. Holy cow!
Yeah, and unfortunately, the story doesn't say what that would a diamond that big would be worth. But it's compared to 3 weeks' wages, even for a strategy consultant in New York City, it'd be probably pretty good. Pretty good. Well, folks, that is all the time we've got for you this week on the MSP Chat podcast. We thank you so much for joining us here on the show. We're going to be back in a week with another episode for you. Until then, I will just remind you, as I always do, this is both a video and an audio podcast. So if you're listening to us right now, but you'd like to check us out on video, go to YouTube, look up MSP Chat. If you are watching us on YouTube, but you're into audio podcasts, go to Google, Apple, Spotify, wherever it is to get your podcasts. Look us up there too. You're going to find us. And wherever it is you do find us, please subscribe, rate, review. It really will help other people discover and enjoy the show. This show is produced by the great Russ Johns. It is edited by the also great Riley Simpson. They're part of the team with us here at Channel Master. They are ready, willing, and able to help you create a podcast of your very own. And podcasts, folks, are merely the tiniest bit of what we do for our clients at Channel Master. If you really want to get the big picture, go to www.channelmaster.com. Channel Master has a sister organization called MSP Master. That's Eric working one-to-one with MSPs to help them grow and optimize their business. You can learn more about that at www.mspmaster.com. So once again, folks, we thank you for joining us. We'll see you in a week. Until then, please remember, you can't spell channel without MSP.